Today, we're talking to Katie Horton, who is a certified financial planner and a certified public accountant. She is also a navigator at Morrow. Morrow offers holistic and personalized financial guidance. You can build a one-on-one relationship with a certified financial planner to help your money work for you, regardless of your starting point. Yeah, so my name is Katie Horton. I am a financial planner and have been a financial planner for over 10 years now. And I really feel like my job is to help people understand and improve their finances. I really have a passion for helping people find freedom in their life. And I can't think of a better place to do that than with your finances, right? If you improve your finances, it provides more freedom just in every other aspect of your life. Yeah, I love that. I mean, I think nothing causes me more stress than finances, or not finances, but like feeling out of control of my finances. So that
Totally.
makes a ton of sense. Um, Obviously, you have a long history of working in finance and personal finance. Can you share a little bit about the founding story and mission of Morrow? Absolutely. So obviously, during the pandemic, we saw a lot of different holes in many different things in our society. And one of those holes was the financial strain that most Americans feel really on a day to day basis. The old way of doing finances, I think, just hasn't worked for most of Americans, right? There's either they're doing guesswork and trying to put things together and hoping that it works out okay in the end, or some sort of do it yourself. They're maybe getting financial advice from their uncle or maybe from an insurance salesman that's selling them things that maybe they do or don't need, right? And Morrow saw an opportunity here to really help alleviate that financial strain that a lot of Americans are feeling. So that's kind of how Morrow got started. And really, the mission of Morrow is to improve the financial health of those everyday individuals, right? We want to provide the resources, we want to help improve knowledge so that people have what they need so that they can make wise financial decisions and improve their financial health. Yeah, that's awesome. And I'm hoping you can share a little bit about what makes Morrow, different from other financial advisors. Yeah, so I've worked with a lot of different financial advisors throughout my career. I even owned my own practice for a while. And I would say one of the biggest differences is really who we're trying to target, who we're really trying to help here, right? We're trying to help the people that honestly most other financial advisors ignore, because either they don't have the assets to be able to pay the high fees, or like I mentioned earlier, maybe there's salespeople that are trying to get you to buy products so that they can get a commission off of it. We don't do any selling. We really are sitting on the same side of the table as people that we're trying to help. And yeah, we're just focusing on a totally different demographic than a lot of the other financial advisors are that are out there. I love that. My mute didn't come off. Obviously finances are a stress for people. Can you talk a little bit in your personal experience or at Morrow, what are some of the biggest financial obstacles you see in clients or people that you've talked to when it comes to their financial success? Honestly, a lot of people and all of us, we don't know what we don't know, right? And so there's this element of financial knowledge that a lot of people just don't have. I hear a lot from my clients. I'm just doing it the way I've always done it or the way I thought it should be done. But once they start improving that financial knowledge, it's like, oh, there's a totally better way of doing this that I just didn't know. And I honestly didn't know to question what I was doing because I didn't know that I should question it, or I didn't really know what to question, right? So it's really helping people improve their financial knowledge. The other thing I would say is honestly emotions. Money is incredibly emotional, and especially for caregivers, right? They have a lot of stress in their life, and often money with everyone is used as a coping mechanism, right? And I'm not a psychologist. I'm not going to go into that, but I think often we use money as a coping mechanism, and that often will mess up a lot of our plans that we put in place, right? Because we aren't expecting that, oh, I'm so stressed out. I'm going to go
buy myself this, or I can't make dinner tonight, we're eating out, or whatever it is. We kind of can use money as a coping mechanism, and those emotions kind of just get in the way. They make us feel totally overwhelmed, and it's, oh, I can't even deal with that, right? Going on the back burner, and then the back burner is forgotten about, and before you know it, there's a huge mess that you can no longer ignore, but you don't know how to deal with it, right? There's just so much emotions that are involved in this. And so I would say those are probably the biggest obstacles that I see that get in the way of people really finding financial success.
I imagine the emotional one is a big one. And I was about to ask you, um, how do you like combat these emotions? And maybe I'm gonna, lead the question here, and you can tell me otherwise if there's other ways to combat all the emotional, pressure of finance. Um, but I guess sort of I would imagine one of the ways to get out of this emotional state is by creating a budget. Um, and there's probably a million other things, but I guess if we could just start with the basics, like how does someone create a budget specifically with care related costs in mind?
Absolutely. It's tough. And budgets, honestly, they take time. And as I've been thinking about this caregiver community, time is not something that's abundant, right? There's so many other demands on their time. And it's, if I told you, you have to track every single thing that you spend and write it all down and put it in this spreadsheet or whatever, you're going to check out and say, yeah, right, Katie. It's like, there's no way I'm going to do this. So, what I recommend is breaking it down into a much simpler process. It definitely takes some effort, right? I'm not going to tell you that this will just like magically happen while you're asleep, but hopefully this process is simple enough that it can at least get you started. So the first step is really understanding the money that's coming in, right? What paychecks, income, what is all the money that's coming in, right? And hopefully that won't be too difficult for you to figure out. Step two is, what are your payments going out? So this is everything from your rent or mortgage, utilities, cell phone bills, medical supplies, care costs that you're paying consistently on a monthly basis. And so maybe make a list of those things. Make a list, write down the amounts, and basically then you can just subtract your income minus these payments. And what you have left over is what I call your trade-off money. This is what you get to choose how you spend it, right? And this may be, you may spend some of this towards reaching your goals, right? Okay, I want to save more for retirement, or I want to pay down my debt, or I want to live a little bit nicer and treat myself every so often because life is difficult right now. And so I want some of this trade-off money to go towards just my improving my living costs. Obviously, in those payments, we didn't include groceries and gas and those types of things. So you'll want to make sure that that's accounted for as you're doing this. But really, once you get to that, what is that amount that you can live off of? Again, I'm not going to ask you to track everything, but two ways that I found that are pretty helpful for people are, one, either get that amount out in cash and that's what you have to spend, or cash obviously isn't ideal for most people. It's really a pain in the butt to go in when you're buying gas to have to go in, right? It's much easier to just swipe the card. So use just one card, right? If you just have one card that you put all of that on, it's super easy to just go online and check what your balance is. And you can kind of see pretty quickly how much you're spending. Again, keeping that one simple number in mind for how much you have.
Yeah, I think that's all super helpful. And I really like this concept of trade-off money. I think that's a good way to think about sort of what kind of bucket you're working with. Um, you mentioned sort of the basics of budgeting is like what money is coming in and what money is going out, and then working with those two numbers for people, which is often for people with inconsistent income, which is often the case for caregivers. Do you have any tips for budgeting with inconsistent income?
Yeah, absolutely. Actually, one of my best friends, she just lost her mom. She'd been a caregiver for 3.5 years. And just 3 weeks ago, her mom passed away. And her husband is an artist. So her husband gets paid once, twice, maybe three times a year. Right. And so that income is very inconsistent. They kind of don't know what they're getting. So I think this can happen on that broad scale, but also it can be more on a monthly scale, right? If you're being paid hourly and you just have inconsistent checks or, that stuff coming in. Absolutely. This is something that takes a little bit more work and planning ahead, right? And so what I usually recommend, and I'll refer back to what I talked about with the budgeting, right? You have to kind of really understand what those payments are. What are those core expenses that are happening every month? And then what I usually try to recommend is maybe getting a little bit more refined in those living expenses. What is my baseline? What do I need to survive? And planning based on that. And so if you have inconsistent income, you know, hopefully your income is enough to cover those basics. And so plan for that amount of income, right? And if you have more than that, great. That can be your extra money that you use to, you know, pay off debt or to treat yourself a little bit more. Take a little family vacation if you save that up, whatever it might be. So I think it's just really important to plan ahead, and also I will say to build up an emergency fund, right? You want to make those sacrifices and those efforts to build up a little bit of a reserve, because you might not know when your next check is coming in, right? And it can be a huge comfort, and again, a relief of stress in all areas of your life if you know, okay, I'm good for the next month, for the next 3 months, whatever it might be. I've got a little reserve. If something happens and my income goes down below what I need, I'm still okay. So it does take a little bit more work if you do have that inconsistent income, but it's absolutely possible. You just have to plan ahead a little bit more.
Do you have any, in that vein, do you have any advice for like how much money you should have? Maybe not a dollar amount, but like how should you plan an emergency fund? What should you consider while you're building that out?
Absolutely. So I would say the first rule is get started, right? And so when I'm working with people, the first goal is, okay, let's build up $1,000, right? Let's have some sort of buffer. I think the target is probably somewhere more like 3 to 6 months of your expenses. Again, that can feel pretty overwhelming for some people if they've got so many demands on their income. But I think getting started and having at least that $1,000, if you blow out a tire and have to replace your tires on your car, it's okay, right? It turns emergencies into inconveniences. And so I would say get started, but, you know, target a little bit more, especially if you have that inconsistent income. It makes more sense to keep a little bit bigger reserve.
Yeah, thanks. You mentioned this just a second ago, but many caregivers, our research has showed us that people, nearly half of them, have experienced some kind of financial setback, whether that's not investing or not contributing to their retirement accounts or tapping into personal savings. I have a couple questions sort of out of this, but a lot of caregivers, another financial setback would be taking on debt. My first of my sort of follow-up questions here are, how can someone start paying down debt? How can they tackle that first?
Yeah, absolutely. I would say, again, similar to what I just said with the emergency fund, get started, right? It's, again, I know how overwhelming it can feel. It's on the back burner. You don't want to have to deal with it, but get started. And you can start small, right? You can start with, okay, can I pay an extra 1%? 1%. Okay, great. I got that. Can I increase that to 2%? And just slowly seeing how much you can find to put towards these debts, right? And I think one thing that I didn't mention back in the budgeting section, but something that I often recommend for the people I'm working with is something I call the traffic light exercise. And so this is something that usually what I have people do is download a statement that has all their expenses, and they get 3 highlighters, a green one, a yellow one, and a red one. We mark in green anything that we value and that we are excited that we spent our money on, right? The yellow is maybe things that we value, but aren't necessarily excited to pay. So for me, that's like my mortgage. I'm really glad I have a house, but I'm not very excited every month to pay my mortgage, right? The red ones are things that, looking back, you don't really value at all. And you kind of wish you hadn't spent your money on that, right? And I'm not going to ask you guys to download statements and do that exercise unless you want to. By all means, please do. But I think that can be a very helpful framework for when you're spending, right? Every time you go to buy something, think to yourself, is this a green, a yellow, or a red expense? And the idea is to get rid of the red expenses, right? We don't want them. We don't need them. And, I was talking to somebody yesterday and they went through this and they found 440 extra dollars that they didn't want to be spending, and so I think there's room in people's budgets if they just take the time to actually look for it and make those conscious efforts to say, hey, this is a red expense. I don't actually need this. I'd rather pay down my debt than have this expense. And, because it's really in 2 weeks, I'm going to be like, oh, why did I spend my money on that?
Yeah, I can think about my own spending and how like little things where you're like, oh, it's $10, whatever. And then it adds up and you're like, I didn't need that $10 thing or that $6 coffee or whatever. Um, or maybe you can, I don't want to place value for anyone else, but I can think about how those red lines would add up in my own spending. Um, there's some, I'm throwing this question at you. It wasn't on our list originally, but there's some people on the internet talk about like working on your debt snowball and starting with your smallest debt and then building up. Do you have any like thoughts or opinions around this approach? Slash maybe just for our listeners, can you explain the debt snowball? And then if you have any opinions about this?
Absolutely. Yeah. So the debt snowball, the idea behind this is, if you add up all of your debt payments, and I'll just pick numbers, but let's just say your total debt payments is $300 a month, right? So I have $300 a month that I'm paying towards my debts. And I can find, we'll just take this, I found this extra $400 from doing this traffic light exercise, right? So now I have basically $900. Sorry, I did the math probably 300 to 400. I have $700 that I can pay towards my debts, right? So the idea is there's kind of two ways to approach this. Either take that extra money and pay it down towards your smallest debt, what has the smallest balance, and put that money towards that to get that paid off faster. And that's pretty good from a behavioral standpoint because it's like, check, I got that debt taken care of. And the idea is you then take that money plus what you were paying on that debt previously and you roll it over into the next debt. And then you keep doing that. The other way you can do that is tackling your highest interest rates first, right? The debts that are costing you the most and doing that same approach, right? Taking that extra money, throwing it all at the debt that has the highest interest rate, and then rolling that into the next highest and so on and so forth until you've paid down all of these debts. I love this approach. I think behaviorally it works really well because you're already not living on that money, And so, but rather than, oh, I paid off this debt, so I have extra money to spend. No, I paid off this debt so I can put it towards the next one and get these paid off even faster. And the one other thing that I would add to this is after you go through this process and you get to that point where you've paid off all these debts, I would say then start paying yourself. Save that money, right? You're already not living on it. And maybe you've been sacrificing significantly. So maybe it's, okay, I am going to like loosen my belt a little bit and I'm going to use some of this to live a little bit better life right now. But don't get in the habit of spending all of it right away. Start saving that and paying yourself. You're done paying other people. It's time to take care of your future self.
Yeah, you've rolled this really nicely into my next question. I again, a lot of caregivers are experiencing financial setbacks like debt. You've just given some wisdom on how to start working on your debt. I guess, the next question is then, okay, saving and investing. I think this can feel hard for a lot of caregivers who are like, but I'm still kind of strapped. Like I'm still stretched thin. I don't want to go back into debt. Do you have realistic tips for things like saving and investing?
Yeah, of course. So obviously to find extra money, I've already talked about examples, that traffic light exercise, if you completed this debt snowball, what I would say is works the best for people is making saving automatic. Set up automatic withdrawals from your account. If you can figure out how much you think you can save every week, every month, whatever it is, great. Set up an automatic transfer directly from your checking to your savings account and put it away, right? The other thing that I recommend to people is actually opening up a high yield savings account. And usually these are through some sort of online bank. So there's not necessarily a brick and mortar building that you can go into. The benefits of these are not only do you get more interest on your savings, right? You start making money on what you're putting away, but it also is a little bit more out of sight, out of mind, right? I'm not logging into my bank account and seeing my checking balance and seeing that savings. Oh, I could just transfer some of that over, right? It's kind of another login. You have to go somewhere else to get it. So it works better for people saving because it's less tempting to just pull that money back over and actually use it rather than keeping it saved. So those are two of the things that I definitely recommend for people as they're as they're really trying to get started saving and investing. And obviously, investing is a very similar answer, making it automatic. Obviously, if you have a retirement account at work, it's really nice when they take that money out automatically. You don't have to think about it. It's set up. It just goes into that retirement account and it's there later. You check on it in 6 months and you're like, oh wow, like I've actually accumulated more than I thought I had. And I, didn't even feel it because it just automatically came out.
Yeah. What I love about what you've just shared is like the behavioral piece of it. Like, how do we make this, easier or potentially harder on ourselves to like not log in and check it? And, like, how do we make it easy to do these things so you don't have to like wave goodbye every month to it? It's just already tucked away into savings. You just touched on this a little bit, but caregivers see firsthand the cost of long-term care and long-term care facilities. We've talked a little bit about savings, but people are, looking forward to how do they set themselves up for financial success, beyond the caregiving experience. I'm wondering if you can talk a little bit about how someone determines, what they can afford to put aside for retirement, and or long-term care savings. Like, how do you start that process in addition to all the things we've just talked about?
Yeah, absolutely. And this can be very difficult for caregivers because often not only are they caring for their parents, but also they may be caring still for children at home. And, so they've got demands both above them and beneath them. And so we kind of refer to this as that sandwich generation, right? This is a group of people that there's a lot of demands going on. And so, I would really say a lot of the things that I've already said before, that traffic light exercise, really keeping that in your mind as you're going out and spending money. Like, is this really adding value to my life? Is this aligned with my goals? And I think that would be the other thing, is really getting clear on what your goals are. And again, back to that trade-off money. Okay, I can use this to make my life better right now, or I can take care of my future self. I often talk about this balance between my present self and my future self. And we don't want to neglect either one of those, right? We don't want to neglect our present self and just keep that belt super tight and, saving everything for the future, because then in the future, you're kind of like, wow, I have more than I need, right? And we don't want to neglect future self, because then, in 20 years we look back like, what was I thinking, right? Like, I lived way too well back then. And so, really trying to find that balance between your present self and your future self. And, I would say you may want to consider something like long-term care insurance, right? There's definitely some security that can come from that. And I would also mention Roth IRAs are actually a really awesome way to get started saving for retirement. And one of the amazing things, if you're worried that like, okay, I think I can put this away for retirement, but I'm not actually sure, like I might actually need that. And if that's keeping you from getting started saving, Roth IRAs actually, whatever you contribute into that account, you can actually take it out anytime. Penalty free, tax free. You have access to that money. Obviously, if you put it in and you invest it and it goes down, then you can't take out money that's no longer there. And if it goes up, you can't take out those earnings that you get. But whatever you put in that, hopefully you haven't lost, you can take that out. So it can kind of be a backup for people. If, okay, I thought I could save this for retirement, but this thing came up and I need that money. Okay, that's okay. You can take it out. So those are, I think it's just hopefully makes it easier and less scary to really just get started.
Yeah, I think that's helpful for someone who doesn't know the words that you just said, like a Roth IRA. What is an IRA, and where can someone actually log in or go to sign up for an IRA, a traditional IRA or Roth IRA? Can you break it back down to the basics a little bit for us?
Yeah, great question. I'm glad you asked that. So a Roth IRA stands for individual retirement account. So this is something that any individual can set up. And if you have income, employment income, self-employment income, you can contribute into this account, right? And there are limits on how much you could put in every year and different things that I don't necessarily need to go into. But most brokerage firms will offer this account. So just to name some of the big ones, not necessarily recommending any of them, but But if you go to Vanguard or Schwab or TD Ameritrade, Fidelity, all, some of these big investment brokerage firms, it's pretty easy to open up a Roth IRA. You can just go on I remember when I opened my first one, it was scary. It was like, this is a whole new world that I am unfamiliar with. Like, what do I do? And there's been many people that I've walked through this process because the first time absolutely can be intimidating and scary. And I don't really know exactly what I'm getting myself into. So, but it's easy to get started. And just another little side note on a Roth IRA. The reason it's called a Roth IRA, well, retirement accounts in general have different tax advantages. And with the Roth IRA, the advantage is you're putting in money that you've already paid taxes on, right? So your paycheck, they've taken out, you're withholding that money you get. If you put that into the Roth IRA, and then we talked about that investment growth, that money gets to grow completely tax-free forever, right? So you've paid that money, you've paid tax on that money now, you put it in a Roth IRA, it grows. Whenever you take it out, after you're 59 and a half, you can take all of it out without penalty or anything. You never have to pay tax on that money, ever. So it's a pretty awesome vehicle in that way, in that it can save you a lot on taxes.
Yeah, I love that. I mean, that's why we're having conversations. That's what we're trying to do is help people, figure out how to save money and maximize their money. You had started to touch on insurance, like long-term care insurance. I'm hoping we can talk a little bit more about insurance. There's, as a piece of financial planning, there's lots of types of insurance, and not everyone needs every type of insurance. Can you talk a little bit about how someone in their like healthcare planning, as part of their financial planning, might determine what kind of coverage they actually need?
Yeah, this can be a difficult place. And like I've alluded to before, there are some people who are financial planners that really are insurance salesmen, and they may try to sell you things that you're not sure if you actually need or not, right? And so, I would say at a basic level, people need things such as car insurance, health insurance, homeowners insurance, or renters insurance, depending on where you are. And those protect against, again, those just basic needs that we all have. The next piece I would recommend is probably life insurance. I usually recommend term life insurance versus a permanent life insurance, such as whole life, universal life, variable life. There's a whole bunch of different things, but a term life insurance policy essentially gives you life insurance coverage for a certain period of time. The question I would ask if you're considering, do I need life insurance, is, okay, if I were to pass away, would anyone then be financially burdened because I wasn't here? Right. And so this can be, if I'm a breadwinner, right, and I'm bringing in income to my house, then obviously if I'm gone, great, income's gone. That's a financial burden on the people who are left. Or maybe I don't have income coming in, but I'm a caregiver. And so if I'm gone, well, now we need to hire somebody else to come in. Again, financial burden, right? So that's the question that I would ask. And obviously how much you need is going to depend on your circumstances, but it may be worth just sitting down and thinking about it, right? Okay, if I leave and I'm a breadwinner, maybe it's, okay, here's how much money I would be making that would be used to go towards my loved ones and helping them ease that financial burden. Some people are like, yeah, I want to make sure that my mortgage is paid off and that my kids have a college education, or, it can really vary, but I would say just try to go through some sort of process to say, okay, what would be the hole that would be left if I wasn't here? If, we need to hire caretakers for children or parents or whoever else, what would that cost? And how much would we want to have to make sure that those who are surviving us don't have to worry about finances, right? That as they're dealing with and grieving the death of you, or as you're grieving the death of another loved one, that you have enough that it's like, okay, I can still breathe. I don't have to feel like ultimately stressed about my financial situation. I would also say disability insurance is something that some people look into. Often employers will offer this, so I would definitely check with your employer, see if they offer that. If they do, make sure you sign up. And like I mentioned earlier, long-term care insurance. This is something that a lot of you are, very well familiar with the value of that insurance. I would say as a general rule of thumb with long-term care insurance, if you have or anticipate having a net worth of, somewhere in the range of $2 million dollars, for a lot of people, that's like, yeah, like not even going to happen. Um, those people, I would say it's pretty easy to self-insure, right? To say, okay, I don't need to buy this insurance. I have enough assets that I could pay for this myself. If you have family members who you can rely on, maybe you don't need as much coverage. But if you have felt the burden, and I talk to a lot of people like this who they've felt the burden or seen the burden that being a caregiver puts on somebody, and they don't want to do that. I hear all the time, I don't want to be a burden on my kids. I don't want to be a burden on my kids. Great. Maybe it's worth considering long-term care insurance. I would say that the ideal time to start looking into this is probably in your like early to mid 50s. Once you get kind of into your later 50s and 60s, the cost of it can start going up quite significantly. You don't necessarily need it in your 40s because, that's you're paying for coverage a lot sooner than you'll need it. So I would say, by your mid 50s, I would look into that and make sure you have the coverage that makes sense for you.
As someone who does not have life insurance nor long-term care insurance, this question might just be for myself, but is a financial advisor someone who can help you find the best either of those insurance types, find the best policy, or is there somewhere else that people can be looking when they want to look into, excuse me, long-term care insurance or life insurance?
Yeah, absolutely. So a financial advisor absolutely can help you and point you in the right direction. You can also go to different insurance agencies and find them, even just a quick Google search on, what's the best long-term care insurance that can help you out. Again, with life insurance and sometimes with long-term care insurance as well, there's a lot of different nuances and ways they can pull you in and try to get you to have coverage that you don't need. I would say I don't want to speak negatively about life insurance people who sell it because it is a very important product. But again, like I said, I usually recommend that term life insurance. It's a lot cheaper, it's a lot more affordable, and it really will give you coverage again for ideally those working years. If your death happened prematurely, that's when you'd be more of a financial burden on the people you leave behind. But, once you get into retirement, ideally you have saved what you need and you no longer need that life insurance coverage. So having some sort of whole life insurance policy, I find typically isn't as beneficial for people as those term life insurance policies.
Thanks. Yeah, that's useful. That's useful to know, especially, someone going in, yeah, to a salesperson who might tell them they need something that they don't. Um, we've talked about a lot of things, saving, investing, paying down debt. If you had to boil down your financial advice into the three things that every person or every caregiver should do with their money, what would those three things be?
Where I always start is income greater than expenses, right? If that's not working, it's worth the sacrifice to get that in place, right? Because if you're spending more than you're making, you're digging a hole, and every month it continues, that hole is getting deeper, right? And again, I get that it can be overwhelming, but making those sacrifices, making that effort to really control your expenses and get your income to a place where at least is equal and hopefully that your income is a little bit higher. So that's where I'd start with everybody, make sure that's in place. The second thing I would say is plan ahead, right? I talked briefly about the taking care of your present self versus your future self, making sure you're planning ahead, setting aside a little bit for that emergency fund, not neglecting that future you, right? You don't want future you to be mad at you, right? At past you. So planning ahead and just taking the time to think about this. I know obviously money isn't at the top of the list for most people to talk about. I personally love it, and that's why I'm doing what I do. So set a date night, where you talk about your money. I have a client who their parents actually, they have an executive board meeting and, they'll drink wine and they'll talk about the state of their finances, but plan ahead. Don't let the current situation, and I get how difficult it can be to think even to tomorrow sometimes. But taking those moments, set aside an hour, once a month and just start thinking about it. And the third thing I would say is make sure you build in fun. I actually, in my personal budget, I have what I call my fun fund. And every month, a little bit of money goes into my fun fund. So if I, one day I'm like, oh, I really want that new pair of shoes, but it doesn't fit into my monthly budget. Great. I can pull that out. Right. Or I want to go on this little trip. I have a little bit set aside because, especially as caregivers, you have to make sure that you're taking care of yourself as well. Right. So much of what you do is focused on those around you. And I'm sure you're all very aware, like burnout is a very real thing. And I think building in that fun and making sure that you are taking the intentional chance to treat yourself to something every once in a while. Building in fun, I think, is a very important piece of any financial plan.
Yeah, I mean, I love your fun fund. I also love the idea of, a date night to talk about finances, which maybe isn't like the most sexy, but I think it brings us sort of full circle to like finances are stressful and emotional. And if we can like figure out how to make it A, more fun to talk about, and B, get it under control, then, it doesn't have to, you're not operating out of fear or stress all the time. So I love both of those ideas. You've given us like a ton of wisdom and tips here. I know that Morrow obviously offers like more personalized guidance for people's finances. Where can people find you and Morrow online if they want to learn more or access your services?
Yeah, so Morrow is actually available on the Givers dashboard. So if you log in there, you can find us there. You can also go to our website, which is usemorrow.com. Or if you'd like to reach out to me personally, I'd be happy to hear from you. And my email address is Katie, Katie, @usemorrow.com.
Awesome. Thanks. We'll make sure that you're linked